Today we're going to talk a little bit about how businesses or firms are organized. So from a legal standpoint, what kind of legal form do they take and what are the different types of businesses from an organizational standpoint. So here you have, as of 2017, so it's fairly recent, the number of different types of corporations within the United States. Okay. And as you can see, firms can take different types of organizational forms. The most common one, as you can see here, this diagram shows you the percentage of the total firms. And you can see that this type right here, sole proprietorships, are over 60%. Roughly 2/3 of all firms in the United States are sole proprietorships. And then you have a type of corporation here. It's called S corporation. We'll talk about what those are in a minute. Okay, you can see these are roughly about 17% of them. Okay, then you have partnerships, which is a smaller percentage. You can see roughly under 10%. And finally, C corporations. So as you can see, most of the firms in the United States are sole proprietorship. So today we're going to talk about what these different words mean, and especially what kind of advantages and disadvantages have organizing your firm in different forms, so that you understand what is at stake and which one of these organizational forms is going to make more sense for your business, because you're going to have to make, for example, this decision for the new business you're going to organize. Okay, so let's start with sole proprietorships. Like I said before, it's the most common of all the types of organizational legal forms for firms. And so there are lots of them. About 2/3, actually upwards of 2/3 of all businesses in the United States, like we saw in the chart, are actually sole proprietorships. They typically are what we will consider a small business. So most of them have 50 employees or less. By the way, what is a small business? We'll talk a little bit about that in another chapter. But for the most part, when people think small business, we're talking about size measured as either in employees or assets, and if you go by employees 50, it's a small business in the United States. Now, caveat here, this classification of a small business may not apply in another country. There are some countries where a 50 people business is considered medium size. So all the numbers I'm talking about is for the United States. Okay. So they are very prevalent. Why are they so prevalent? Well, here are the reasons why they are very prevalent. One is it is very easy to set up a sole proprietorship. Okay, it's a simple process. You do not need to hire a lawyer to create a sole proprietorship, and you only need one person, as in one, to agree to do it. Okay, so you can start a sole proprietorship at any point in time. It's cheap to do. You'll have to fill some forms with the state, and it will cost you a little bit of money, but we are talking about tens of dollars, not hundreds or thousands. And it has some other advantages as well, because you are the only owner of the firm. You are a sole proprietor. That means there is one owner, right? Because of that, you don't need to disclose any information about how the firm operates or what it's planning to do. And because of that, your decisions are just kept to yourself. So you have the ability of being secretive, let's say, about, I don't know, the formulation of your product, right? So you don't need to disclose that to anybody. Okay, good. Also, you get to keep all the profits from actually operating the business. So you can decide what to do with those profits. You can pocket them yourselves. In fact, the other day we were talking about income distribution in the United States, and we're looking at some figures from the Internal Revenue Service, and you could see that there was a small percentage of people, maybe 2 or 3% of the total people in the United States that were making over $250,000. Most of those people own a business, and most of those are sole proprietorships. So, you can keep that money. That will be your income. Or you can reinvest it in the business. It's really totally your choice, and you get to make the call, which is not true in other types of corporations. We'll talk about later. Okay. Another upside, or it could be an upside, is that your profits only get taxed one time. They get taxed as your personal income. Okay. So we will see that this could actually be in your favor in the sense that they don't get to tax those profits twice, like it happens in the case of a corporation, for example. Okay, and if you decide that you want to close the business, you can make that decision simply because you are the only owner, so nobody's going to stop you. This makes that process simple, and it doesn't oftentimes require legal counsel. Okay. What are the downsides, though? There's no free lunch, right? As you can imagine, otherwise every firm will be a sole proprietorship. The biggest downside is the first one, is that you have unlimited liability. If you are the owner of a business and something goes wrong with that business, right? If you have a delivery truck and that delivery truck smashes into, I don't know, God forbid, a crowd of people, you are liable for that with all your assets, right? So you are fully liable. And this is probably the single biggest downside of a sole proprietorship. This makes it incredibly risky. If anything goes wrong, depending on the state, you are liable even with your home, right? In some states, the home is off limits, but in most places, you are liable with all your assets, not only the ones from the firm that you have created, but also your personal assets. Okay. You're going to have limited access to funds because it's just you, right? If you have more people involved in the firm, usually you have more possibility of asking them to maybe front their own savings, for example. Okay, you might be able to get also access to other programs, etc. Right? Also, limited skills is just you. So if you are awesome, and I know you are, that's great. But usually, two brains are better than one. You know, assuming that they are not at odds with each other and fighting, right? And so you are limited in skills. Yes, you can hire people, but from a managerial and strategic decision point, it's just you making all the calls, which is good because, you know, nobody's going to argue with you. But on the other hand, you might not see everything that there is to be seen or consider all options. Okay. Difficulties, lack of continuity. Most of these businesses died when the founder dies because there is nobody behind to take on the reins of the business. Sometimes a family member does, but unless their mind and skill set is on point, it may actually not work. Okay. It's hard to find good employees because you're a small business. So who's going to actually be excited to join you? Maybe some people, but it's not as easy as if you are a large enterprise that everybody knows they're excited about working in. And finally, like I was saying before, the taxes could be a benefit or a downside because as an individual, the highest marginal tax rate, it's pretty high. It's almost 50%, right? So, you know, depending on how much money your business makes, the taxes are going to be pretty high, whereas corporations are capped at 35%. Okay, so you need to understand that the taxes, it's potentially a double-edged sword. You only get taxed once, but the rate at which those profits get taxed could potentially be pretty high. Okay? So maybe reinvesting is the way to go sometimes. Now, if a sole proprietorship won't do, the next step will be a partnership. What is a partnership? Partnership, like the name implies, is when you at least have two people that form a business and co-own that business. It's at least two. It doesn't have to be two. A partnership could have a large number of partners, and there are some companies that are organized like this. For example, the large consulting firms are for the most part partnerships, and they have a large number of partners. But most partnerships are small, okay, with a small number of partners. And of course, the minimum number, it's two, like I mentioned, okay? And they tend to be larger than the sole proprietorship, although it doesn't have to be. And they are quite infrequent. If you remember the chart that I showed you before, if you add the two corporations as just a corporation, the partnerships are the smallest number of firms in the United States. So they are less common. Okay. Now, there are different types of partnerships. There are general partnerships, and there are also limited partnerships. Okay. I'm not going to get too much into the details. You can read them if you are interested in the book. They are more popular in some industries. For example, limited partnerships are used a lot when exploration happens for oil companies, where you just create something that it's ad hoc for that particular oil well or oil exploration area. but in other industries they are not very popular. Now, the important part in the partnership is that you're going to have to write down the articles of partnerships. This is basically a document that establishes who's going to be liable to what, and also who's going to be taking what part of the profits. Okay, and there is a possibility within partnerships to have one of the partners take on all the liability, like if it was a sole proprietorship, that will be under a limited partnership. And another or multiple others to not to take on full liability, which, you know, usually the ones that don't take on full liability also take a smaller share of the profits. You know, it's a tit for tat, right? You have a higher risk. If you are fully liable, if you're the partner that it's liable for with all your assets, then you're also going to be taking the largest share of the profits. But this is all specified in the articles of partnership, where you're going to have to break down exactly what's going to happen. Now, if you start thinking about the complexity partnerships include, I will suggest, although this is not necessary, that when you're writing your articles of partnership, you actually hire a lawyer that knows about what needs to be written here. Because what happens oftentimes is, if there is not a lot of things that are specified in the articles of partnership, there will be disputes down the road. Because when you have a group of people trying to make decisions, it's hard to make sure that everybody agrees into what direction you're going to go, and this can get ugly. Okay, so when you're writing them articles of partnership, you need to make sure that you know what you're doing, and at least you have, unless you have experience, probably hiring a lawyer will actually be a good thing. Okay. Now, what are the advantages of a partnership? Well, even though sole proprietorships are easier to set up, partnerships are still pretty easy to set up. Okay, and they don't require a lawyer to be involved. Okay, again, this is filling up some forms and filing them with the state. And again, you're going to have to pay a few fees to do this, but it's not a big deal. Okay, and you only need two people to agree to this. You need two different people. Okay, for obvious reasons. So you as a single individual cannot start a partnership, but it's still pretty simple. Okay. The nice thing about a partnership is, by having two people, you enhance the chances of acquiring funds or capital for the operation of the firm. Okay, because obviously if I have some savings and you have some savings, we can put those two together and now suddenly we have more capital, right? Also, if you go to a loan, if you go to a bank to ask for a loan and it's only one individual, you're going to have, depending on your credit and your assets, you're going to have a certain amount of money they'll be willing to give you. But if you have two such people, obviously you're going to have more money available, which is nice. Okay. Also, hopefully, the skill sets of those two partners are somewhat complementary. I would suggest, if you have a choice of starting a business with somebody, that you actually have skills that are somewhat different but both useful. Right? So maybe I'm a good salesperson and you happen to be very good at the technical aspect of the business, right? So you know how to put computers together and I know how to sell them, right? Obviously, the fact that we are a partnership, it's going to work out well because we have skills that are complementary. If everybody's very good at building computers, but nobody knows how to sell them, you're probably not going to do that well in the marketplace, right? And finally, decision making is still relatively simple, although the moment that you include another individual in the decision process, there is always a chance that things are going to go awry because it's not just you making the decisions. On the other hand, when it's a small group of people reaching some sort of consensus, it's a lot easier than when you have a really large corporation. Okay, so those are the plus sides. What are the downsides of partnerships? Well, there are a few. One is at least one of the owners, depending on the type of partnership. It's a general partnership. Everybody is fully liable with all their assets. So you have the same problem that you had in a sole proprietorship. Okay, which is that if things go wrong, you can get sued for everything that you own personally, not just from the business side. Okay. Also, the difficulty with the partnership is what's going to happen as the owners of the partnership go away, right? What's going to happen with the partnership? So let's say that we have two people that we have partnered for 10 years. We've been in business, and now I decide that I had enough and I want to leave, right? This creates a legal void, right? Because if I leave and only one person is left in the partnership, it's not a partnership anymore. So you need to find somebody that is going to buy my share in the partnership and we need to agree to that. The other party needs to be okay with it. So this can actually create some difficulty of continuity, and also quitting the partnership can actually be a challenge and something that can end up in court. Okay. Also, distribution of the profits can be a problem, right? How are we going to decide that now? If you have written your articles of partnerships properly, this kind of sort things out somewhat, but you still need to agree how much of those profits are going to get reinvested versus distributed among the owners or the partners in this case, right? That can be complicated when you have multiple people involved. They might have different views of the future and what's important right now to maybe pocket some of those profits or actually reinvest them in the firm, okay? Also, you have two people, it's better than one, but it's not comparable to the funds that you could acquire if you were a corporation, for example, when you have a lot more sources of funding available to you. Okay. Like I said, from taxation purposes, they are considered quasi-taxable organizations, which means that the individuals are the one that pay the taxes, and you only get taxed once. Okay, for all the profits that you get as personal income. So it's similar to a sole proprietorship.